It is Legacy Thursday here at Brave New Coin. Hopefully you can understand me past my deep voice I have this fine Thursday. I'm going to start with the usual correlations that I have discussed frequently now, all of which are making less and less sense in a general scheme of things. Massive rotations going on all over the place. Gold taking a hit, silver taking a hit, Dixie rising significantly. The VIX basically flat. I did a video on the VIX if you don't know what that is, so you can check that out. I did that earlier this week for BNC. Currently around 17.5. Lots of people expecting a big jump in the VIX. If that is the case, then we will see an extreme drop in crypto. We have always seen that. In March 2020 we saw that. We saw that. And any spike in the VIX, just look at it. Every single spike up has been bearish, while at the same time being a good buying opportunity. So that's also important to realize that, yeah, if you're holding anything, you're going to get wrecked. But if you're holding cash, it's a good time to rotate into crypto, not investment advice. But historically, those plays have worked out. Dixie correlations flipping positive, gold correlations flipping increasingly positive. You know, none of that really makes sense. If we're truly risk off, which we aren't, but if we were, we'd be highly positively correlated with gold. And these positive Dixie correlations since 2017 have not lasted for any significant period of time. It's also important to mention that this is the weekly 30 period rolling correlation between everything here. SPX and NASDAQ correlations are continuing to drop, now around 50% positively correlated for both of those. Which is good because SPX and NASDAQ look like they're ready to jump off a cliff based on what the structure looks like. I've been saying that for weeks. There's been perma-bears who've been saying that for weeks and it just hasn't happened yet. But that's another reason why the VIX might spike if SPX and NDX take a massive hit to the bearish direction. Individually, we'll start with Dixie, which I've been looking at this hoping that this didn't work out for weeks because this looks like an inverted head and shoulders, which is a bullish reversal pattern, which would be incredibly bearish for BTC. It also has had a multi-month RSI bullish divergence. So it really looks more and more by the day, despite everything that's going on here in macro printing world, that we're headed higher on Dixie beyond 92, 93, as high as 98 potentially, based on sort of the measured move here. And if we compare that to just movements, again on the weekly since 2015, when we had our run in 2015 to 2018, the Dixie was essentially flat or falling. You know, we had our biggest upthrust when the DXY was moving down from 102 to 88. And we topped very close to the bottom of the DXY. And then we continued downward throughout 2018 as the DXY gained strength. Now, none of this is perfect. You'd have to run the correlation metrics on this, right? I don't know. But it looks good enough and close enough to me. I don't think it's pareidolia. I think it's very real. Look at this 2020 to 2021 move. Very obviously, Dixie again falling from 102 to 90. And we had a massive move here in 2021. Everything, of course, mooning, meme stocks were born, whatever. So again, if Dixie moves up, you can't be bullish on that for crypto. Potentially, we could see ETH back to 630, back to 520, somewhere in here. We could see, where is it? Where's my BTC chart? Yeah, here it is. We could see, that's not it, sorry, hold on. We could see BTC 22,000 to 20,000 based on the yearly pivot, based on previous all-time high. If we lose this midline, we will start delving below. That includes 20s. That potentially could include 15 to 18, right? Like I'm not gonna sit here and call anything. I'm just gonna say, look, objectively, if we're below this rate of change, we have some room to squirrel around down here, but from where we're sitting now, we're talking about a massive decline. That's across anything in crypto. The DeFi stuff looks like absolute junk. I did a video on all of that yesterday. DeFi looks like it could do another 50% leg down easily. So yeah, 600 a crazy target for ETH. obviously, duh, but it's back to the yearly open. Okay, that's really everything I'm looking at here is back to the yearly open. And as far as the pitchfork is concerned, you know, again, everyone hates the pitchfork. I don't understand why, but if we look at this and compare it to what happened in 2018 for BTC, we did eventually return to this midline on BTC. You know, it took an entire year to get there, but we got there and then we dropped below and hit a yearly pivot. So this isn't like unprecedented in pitchfork land where we shoot way above and then end up returning to the mean, which would probably be 800 or whatever by the time we get there. So just keep that in mind. This is going to continue to move up as a support, but I can't get bullish on this, you know, if Dixie keeps rising. And if ETH breaks this diagonal trend line, that's the first sign of trouble for sure. Along with all of DeFi, I mean, DeFi is just going to get wrecked if rates go up and all that stablecoin printing stops, because you can get better rates in legacy world. It's going to take a while for that to actually happen, but that's in the cards too for DeFi. These DeFi rates were extremely high because lots of people were borrowing. As less people are borrowing and more stablecoins get printed, the rates go down. As the rates go down, they get less competitive with the legacy rates, and there's less incentives to print stablecoins and enter DeFi. That's my own personal view. Gold taking massive hit as well, back into the daily cloud or weekly cloud. I don't think there's really a trade here, one or the other. Just interesting to watch something like the size of gold just get smacked down so hard so quickly in a couple weeks from 1900. Nice little Eiffel Tower there. Silver at the support of this ascending triangle. I still like it. You know, it's a weekly chart. It's going to take forever to play out. If you're bullish, you don't want to see lower lows here. If you're trading this on 200x leverage, good luck. You know, use some caution, use some common sense. Metals take forever typically for any move to happen if it does happen. But I still think it looks fine. I'm not really concerned. I'm still holding my small silver position in Legacy, unleveraged. Here's SPX, which again looks like it's absolutely cliffing, continues to be, looks like it's cliffing, you know, it looks like pre-March. It looks like any of these time points where it was way above the Tenkin on the cloud on the weekly, way above the Kijun on the weekly. This is probably the biggest divergence between price and Kijun, probably because of the big drop here. So it's going to skew all of the averages lower. But, you know, again, in a vacuum, this is not, I don't look at this chart and get bullish thoughts here because it just looks way overbought. Arguably a tiny bearish divergence here and a higher high in price and a lower RSI. Now the NASDAQ looks like a multi-year bearish divergence at this point, right? It's just higher highs after higher highs on less and less momentum, with the Kijun catching up to the Tenkin here. And if those cross at the top, that is the best sign you can get to get out. You know, if typically these crosses are late, right? Like the move happens and then we get the cross. But if you can get your cross, even here, the move happened, then you get your cross. But if you get a cross all the way at the top, that is a gift in a vacuum to get out. Maybe it recrosses to the upside. Great, excellent. But it's telling you this is slowed down to the point where it's on averages, you know, getting less and less bullish. And this is just, this has to play out eventually, right? Reminds me of that weekly oil bullish divergence where it took like 3 years to play out, but when it did, it played out, right? So again, you can't look at this and get bullish. I just can't. Nevertheless, GME still looks fine up here. You know what? I was shocked to see AMC holding 60.5, and I could easily see this GME thing breaking up on insanity, just like AMC did. I'm not going to put money on it, but if AMC can break up, why not GME? You know, I don't know. The longer this show goes on, the weirder things are going to get. There's even an inverted head and shoulders here on AMC, and I mentioned this last week, but again, Wyckofian accumulation into ascending triangle that breaks up. So this is like the silver playbook. This is the 4-hour BTC. I have it somewhere if I can find it. This is the 4-hour BTC playbook potentially if we don't sell off to zero in the next 4 hours. but Wyckofian accumulation leading to some sort of triangle that typically breaks up. In this case for BTC, we don't want to see a return to the median line down there. Here's coin, which if crypto sells off, I expect this thing to go to 150 or less. Tons of volume down here. Still not below the 200 period moving average on the 1 hour. Still not below or above the 1 hour cloud. This looks like Zcash, just the perpetual selling so far. No bullishness whatsoever. It's trying to bottom, right? But if BTC and ETH sell off, people aren't going to get bullish on Coinbase. Here's MSTR, which actually looks okay trend-wise. If anything, there's a massive TKC clamp here on the hourly, suggesting overbought conditions. But I like to look at this one because they're like 80% BTC, right? So if there's some sentiment in institutional or legacy that's divergent from BTC, which it kind of is here. I mean, this looks way better than the BTC chart at this point, at least since the 14th. They still haven't announced their purchase of the $500 million bond that I'm aware of yet. So maybe that's still coming or in the cards. Ultimately, unless this gets back above 810, it's not really like macro bullish. It's just ranging between 4 and 8. But if this starts slipping while BTC's flat, or if this starts rising while BTC's flat, then that typically indicates bullish or bearish sentiment, leading or lagging, coming for BTC. Tesla, they hold a bunch of BTC. They're worth looking at. It looks like they're headed for lower as well. 50%. I mean, this looks like any alt chart potentially where it could just hit 300. This is definitely a descending triangle with a much lower target. And if they announce that they've sold or are selling their BTC in their treasury, then that's not going to bode well for the BTC spot markets. Here's Square, which is starting to look better. They hold a lot of BTC as well. They have a little bit of a diamond top, two-headed head and shoulders, something, whatever this is, doesn't look bullish just yet. Still potentially setting up for a death cross here on a daily. Just looks trendless right now at the moment. As far as the grayscale stuff, still have a negative 13.5 premium on, or discount on BTC. GBTC is the ticker. ETH is a negative 7% plus premium. This is growing, which I think is bearish for ETH. Both of these will probably never be positive again because the vesting and lockup periods are over. Generally, this pink sheet stuff holds like a 0 to negative 20% to spot. It's not an ETF where they have some mandate to hold positive or a flat price relative to spot. This can do anything, right? Like look at the ETC stuff. Anything that's incredibly positive is due to the vesting periods or lockup periods where they cannot sell this. So anybody who's bought 6 months ago or whatever it is can't sell just yet. I don't know if it's 6 months for this one or 12 months, whatever it is, but they can't get out yet. That's why it's still positive. And that's why these are negative, is because anybody who got in early has sold, so that ARB trade or cash and carry trade is over with at this point. And we do have the CME rollover coming next Friday. I thought it was this Friday, but I guess it's next Friday. So maybe we squirrel around here some more in near terms until we get that rollover. But ultimately, if this upcoming rollover on the 25th solidifies bearishness, we're very likely to be bearish until the end of September. Wake me up when September ends is a thing, just as it was here. Wake me up when September ends, right? We actually did stuff post-September in a bullish fashion. Generally, these biannual contracts have been a one-way street, even since the beginning of CME in 2018. 6 of the 7 contracts have basically either had only higher highs or only lower lows the entire time of the contract. So, I can't get bullish if halfway through this contract, we're still bearish, right? Like the market's telling you we're bullish, we're bullish, we're bullish, we're bearish, we're bearish, we're bearish. This could have something to do with like the Greeks in the options. Maybe somebody who knows more than me can chime in on that in the comments, but these rises and falls generally hold throughout the entirety of those biannual contracts. So that's important to keep in mind. Here's the CME versus BTC spot discount or premium. So we're currently in backwardation on futures, which isn't bullish, and just removing all the noise a little bit, you can see how deeply in backwardation we are on a 50 period moving average time frame. And this isn't open 24/7, so it's always going to have some sort of discount or premium for the most part. But in November and in 2021, we held a very positive premium. We held above 0 for quite some time. And then all that premium decayed, and now we're in backwardation. So it's hard to get bullish when we see that. This may change by next week when we get that inverse premium decay because the contract closes. So that's definitely worth watching. If the new contract opens and we're still in backwardation, it doesn't bode well for the bullish side of things. Lastly, I'll just mention the ETH-BTC fund. I trade for Techemy Capital on Enzyme.finance, as well as the DeFi portfolio. Both of these you can send ETH or USDC into a smart contract if you want, or you can just watch what I'm doing. You can see everything: AUM, allocation, trades I make all through dexes, deposits, withdrawals. You can see people getting in and out. It's not like it's a virtual hotel or anything like that. And the DeFi portfolio at one point had 15 to 20 DeFi blue chip coins. Now is comprised of 4 of the best looking coins relative to what we had in this portfolio anyway. And even these are starting to look weaker and weaker. So it's getting more likely then that I end up cutting all of this stuff and just buying at a 50% discount. You know, that's what you want to do. You want to buy, if you're expecting prices to go lower, you either have a stack that you're just hodling, or you are all in cash, carefree, letting it die, right? And picking up everything when it's on sale. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.